So when you take an Uber, you pull up the app on your phone. Yeah, you get Uber, the company, to provide you with a ride, a driver. You pay Uber, you hop in the car. It's an Uber driver that picks you up. At the end of it, that's Uber that pays the driver. Uber controls the whole transaction. And therefore, they should be considered the driver should be considered at least some kind of worker. But if you look at the filings for Uber, they don't think that drivers are their workers, whether it's employees or contractors, at all. The base assumption that runs through all of the filings in all of those jurisdictions that I mentioned is that drivers are actually the consumers of the product. The product is the platform. Drivers pay a service fee to the company, to Uber, to be able to use that and get connected with the with the end user. And the end user and the driver, in Uber's mind, contract directly with one another. In Uber's mind, there is no relationship between them and the end user.
Kia ora koutou, and a warm welcome to episode 12 of Locked Out with Craig Renney. By day, I'm the economist and director of policy for the New Zealand Council of Trade Unions. But by night, this podcast looks at the numbers in New Zealand and asks the hard questions so that you can too. We hope that you're enjoying the show and that what we do here at Locked Out. If you like the analysis that you hear in the show and think others would too, then recommend us to your friends or even your enemies. Also, give us a recommendation wherever you get your podcasts. It really helps get the word out. Here at Locked Out, we're always really interested in what our viewers and listeners want to know. If it's making you say, how are businesses so confident about the economy whilst workers are so poor? You can be in no doubt we are too. So get in touch. I'm on X, Blue Sky, and on Substack. We want to hear how we can help you better understand what's really going on and how you can navigate the numbers being thrown around by politicians and experts alike. Now on the show today, we're very fortunate to have back on the show Ed Miller from the Centre for International Corporate Taxation and Responsibility, or CICTAR. Ed was on our very first show, and he's been looking at Uber and how it structures its affairs so it can have huge revenues, but apparently tiny taxation payments. This research, conducted with Workers' First Union, has also been looking at how its profits might be driven by the way in which it treats its workforce. Uber is currently before the Supreme Court next week, having lost a case in the Court of Appeal. There, the court found that a sample of 4 workers were actually employees and not contractors. That meant that they were entitled to things like sick leave, minimum wage payments, and employer ACC contributions. All of these things are currently expenses for the contractor rather than for the employer. The government's also proposing changing the law so that even if Uber loses in the Supreme Court, they likely won't face any consequences of having misclassified workers. Anybody who ever signs a contract that says they are a contractor will now, if this law passes, not be able to take their employer to court to show that they actually really are an employee, even if they behave and act just like an employee. It's yet another piece of workplace legislation being forced through by the Minister for Workplace Relations, Brooke van Velden. But what does New Zealand get from this relationship that clearly benefits Uber? Let's talk to Ed now. I'm delighted to join on the show with us today Ed Miller, researcher at CICTAR, the Centre for International Corporation Tax and Research. Ed, it's lovely to have you on. You were on the very first show of Locked Out. As a researcher, can you tell us what challenges you're seeing currently in the labour market right now?
Well, from a worker's perspective, undoubtedly the largest kind of challenge that workers are dealing with right now is relatively high unemployment. Unemployment is as high as it's been for the better part of 15 years now. And as a result of that, high unemployment means if you're in a union, your wage demands are, or whether you're not in a union, your wage demands are much lower than they would be. You can't demand as much as you could otherwise. And in fact, we've seen that unemployment expectations for the coming period, unemployment is expected to stay higher for longer, to be higher and to stay higher for longer, if you want to stick up that slide. So you can see here, here's the current unemployment rate that runs, we've got 2018 to 2025 here in that blue line. You can see during that COVID pandemic period that it was right down to just on 3%, and now it's up well above 5%, and it's expected to stay higher for longer. Those two dotted lines are the December 2024 projection of where unemployment was going to be. That's the orange dotted one. And the green dotted one is the newer May 2025 projection. So more unemployment for longer. This sucks for workers. And in fact, for many companies, it's not a good outcome as well. But for one company in particular, they really benefit from high unemployment. That company is Uber, the one that many of us know a lot about. And I'll talk in some detail about Uber as we move forward.
So I understand Sigtar has done some new research on Uber. What's that research being trying to understand?
Yeah. So Uber is a really interesting company. Uber believes that it is a technology company rather than a transport company. And there's a lot of implications for that, and we'll go into it in some detail as we go through the interview. But I mean, the first kind of insight that I wanted to get a handle on is how can such a big company that's had such an outsized impact on the New Zealand transport market be in a situation where its two operating subsidiaries, Razia NZ Limited and Portier NZ Limited, that's the rideshare and the delivery business, only pay $1.2 million worth of profits in the latest reporting year. This is a multi-billion-dollar company that is as big as any. It's completely transformed the transport market in this country, yet it only pays $1.2 million in tax. That was the question that I wanted to get a handle on. So I dived right into Uber's financial reporting. I looked at New Zealand financial reporting. I looked at the American parent company's financial reporting. I looked at stacks of Dutch filings. I looked at Singaporean filings, and we came to some interesting conclusions about how it understands its view of the world as a company, and what that means for workers and our ability to collect tax. Should I just...
So if you want to dive into it, what basically have you, it sounds like there's an awful lot of research that's happened here, an awful lot of new data. What can you tell us? What have you uncovered?
Right. Well, I think you alluded in your introduction to the fact that Uber is going to be appealing the Court of Appeal decision in the Supreme Court next week. The question that they're going to be looking at is the question of classification. And the Court of Appeal said that Uber was effectively misclassifying its workforce. So a group of 4 Uber drivers took a claim, and they said, we think under New Zealand law, we should be classified as employees, but we're currently classified as contractors, right? So they won that case at the employment court, and they won it at the Court of Appeal. That's the drivers, and Uber is appealing at the Supreme Court. Really, I am looking at the same question, that question of misclassification, and that's what the report is called. It's called the business of misclassification, and I probably should have mentioned that earlier. I say that misclassification runs right through the Uber model, right? Uber not only misclassifies the workforce, but they also misclassify the business transaction itself. So when you take an Uber, you pull up the app on your phone, you get Uber, the company, to provide you with a ride, a driver. You pay Uber, you hop in the car, it's an Uber driver that picks you up. At the end of it, that's Uber that pays the driver. Uber controls the whole transaction. And therefore, they should be considered the driver should be considered at least some kind of worker. But if you look at the filings for Uber, they don't think that drivers are their workers, whether it's employees or contractors, at all. The base assumption that runs through all of the filings in all of those jurisdictions that I mentioned is that drivers are actually the consumers of the product. The product is the platform. Drivers pay a service fee to the company, to Uber, to be able to use that and get connected with the driver. With the end user, and the end user and the driver, in Uber's mind, contract directly with one another. in Uber's mind, there is no relationship between them and the end user, which is baffling, right? Completely at odds with, I think, the driver experience, but also with the passenger experience as well. The drivers are very much controlled by the company. They can't set prices or anything like this. Uber kind of defended this in the Court of Appeal by saying, well, we do give drivers the ability to lower the price from what we say. The Court of Appeal said that's illusory. In fact, they referred to it as window dressing, saying not an accurate representation of how that transaction works. And in fact, Uber at the Court of Appeal, the Uber's counsel was the language that the judge, Justice Goddard, used was Uber disclaimed this argument, that effectively they were made to eat their words, and Uber accepted that drivers do in fact provide services to the company rather than it being a direct transaction with the end user. The problem is this runs right through the reporting of the company, and therefore that the revenue that they report is what they refer to as service fee revenue. It's the revenue that they charge to the consumer as a proportion of the fare. We don't really get to see in Uber's filings the total revenue, well, at least on the New Zealand side anyway. We don't get to see the total cost of all the fares and deliveries that Uber provide. That revenue fare isn't listed. So I went to the trouble of estimating it based on their filings. Uber says that they charge, and globally they try and charge a 25% service fee, which should mean that if you want to come to the real revenue charge, then you would multiply it by 4 because 25, in reality, it's not quite as simple as that because in New Zealand, they charge a 28% service fee. But anyway, according to Uber's New Zealand filings in 2023, they say that the total cost of, the total revenue came to something like 365 million. We estimate that Uber's total revenue is actually a lot larger than that. The number that we came to was 861 million. And if you were to compare this to other companies in the economy, it's of a similar size to a company like Transpower, for example, which is the national grid operator and manages all electricity distributed across the country. So
on the screen here, Ed, we have Uber's filings globally.
That's right. This is the parent company. That blue line at the top is showing you the service fee revenue on a global basis. The real revenue is, if Uber is considered a transport company rather than a technology company, is somewhere in the order of 4 times this, which means that in 2024, when service fee revenue reached $44 billion, the real revenue, which Uber refers to as gross bookings, came to about $169 million US dollars. I expect that by the end of 2025, Uber's gross booking revenue will reach $200 billion globally, which is somewhere in the order of 340 billion New Zealand dollars. That's getting pretty close to the entire GDP of New Zealand, the country.
And yet it somehow seems not to be paying any taxes as a consequence of any of that. And it's increasingly not just about transporting people, because if we go to slide 3, we can see that it's about increasingly delivery and a smaller but growing area, which is just called freight in terms of its movements.
Yeah, that's right. Uber has been so successful and is so dominant in so many markets. If you take New Zealand, for example, in the private in the rideshare market, they claimed in 2023 an 80% share of the market. That's grown since then because their biggest competitor, Ola, has departed, and there's been a number of taxi companies which have collapsed because they can't compete with the Uber model, which relies on, misclassified labor as well as a very low tax rate, which we'll talk about in a moment. But they're also breaking into new areas of delivery as well. So Uber Eats is a big part of the offering. Now you can get fast delivery of groceries from a service called Milk Run, which connects Woolworths to Uber drivers. So effectively, you can get really fast delivery of a limited range of groceries that can be delivered by Uber drivers to your door. That Milk Run service was interestingly originally proposed in Australia as an employed driver service, but the margins were too slim and the company collapsed. Now Uber is also kind of breaking into the health transport sector as well. So if you need to go and get certain procedures done, but you're not able to drive, then Uber can provide you with a driver that does this as part of the Uber Health offering, which is not yet available in New Zealand, I don't think. But I think the point here is that the Uber is expanding at such a rate because of the the advantages that they are able to avail themselves of, which other transport operators aren't necessarily able to access. They're through the low cost labor model at the same time as the low rate of tax that they pay, which we'll get to in a moment. But that incentivization means that we're going to see a growing proportion of the economy slipping into similar modes of service delivery that you get from Uber. So we're going to see larger parts of the economy that use low cost labor models and that use light touch tax approaches as well. And our ability to deliver public services and decent infrastructure will suffer as a result of a protracted corporate tax take.
So let's get into it. We've discussed, Uber, a very large company internationally, a very quickly growing company internationally, one whose business model is premised essentially on misclassifying workers as contractors, so that the company acts essentially as a dating agency rather than as a platform or as a taxi firm or anything else. Now, if we sort of suspend our disbelief for a second in that potential fiction, then what does this mean for New Zealand? What do the numbers show us about how well this is working in New Zealand?
So the numbers that we pointed to before, Uber reports domestic, well, in 2023, Uber's two operating subsidiaries reported domestic pre-tax profits of $4.5 million, right?
Mm-hmm.
We taxed 1.2 million of those away, but the broader revenue measure that we were pointing to before, if all of the cost was included within the revenue, comes to $867 million, right? We get $1.2 million of tax from $867 million worth of revenue. It's a very small amount of tax that's being paid. And the reason for that is the vast majority of the profit that is able to be booked by Uber is not being booked in this jurisdiction. Uber has a very elaborate global structure that has been changing recently, and we document the changes that have taken place in that report. Essentially, Uber's most important asset is its intellectual property. And there was a lot of reporting in 2019 when Uber sold itself its intellectual property. It borrowed from itself to sell itself its intellectual property, and in doing so created a large tax shelter in the Netherlands. So its intellectual property was in Bermuda. It sold it to the Netherlands with a loan from the Singapore, all of these being Uber subsidiaries, which created a tax shelter in the Netherlands. And it used to be that the profits or the intercompany service fees, as Uber classifies them, would go to the Netherlands to help pay off that debt to themselves. Now,
just to be clear, because there may well be listeners or viewers at home who are currently wrapping cold towels around their heads, trying to work out, sort of follow the chain here. Essentially, our firm sold itself to itself. In selling itself to itself, it used a loan that it created to itself, which creates a huge loss. That huge loss it can use to offset any profits that it has, even though the loss is to itself. And in offsetting that profit, it now mysteriously has no tax to pay because technically there's no profit made anywhere.
That seems like a pretty accurate description of what happened. Yeah. Uber had its intellectual property assets in Bermuda. Uber Bermuda sold those assets to Uber the Netherlands, financed by Uber Singapore, creating a tax shelter in Uber the Netherlands. And that used to be where the service fees from Uber's New Zealand operating subsidiaries went to. In 2020,
where are they now?
Yeah, so this hasn't been reported anywhere else, but it appears that in 2021 and 2022, Uber transferred those intellectual property assets to Delaware, which is a state in the US. It was the first state, for US history buffs. Joe Biden's state. It's long been the place where credit card companies incorporate, but it's I guess the preferred state for locating intellectual property assets in the United States for a number of reasons. One, a very high level of secrecy. Two, it has very pro-business courts. And three, it exempts intangible assets that are located in Delaware. Income on intangible assets located in Delaware are exempt from state corporate income taxes. Sorry, that was
just for our listeners at home, because again, this is all hard stuff. Trust me, and I'm loving you genuinely explaining this really well. But there is a company which has its intangible, i.e., you can't touch them, assets, its intellectual property assets in Delaware. The profits that it generates from those intangible assets, aren't taxable.
They're not subject to the state income tax. Yeah, that's right.
Right. That's right. And as a consequence, any profits it generates on that intangible asset, which, as you've said, Uber sees itself as an IT company, as an intellectual property company, they're now tax-free. And as a consequence, it can make large amounts of money and not owe Uncle Sam, the IRS, or good old New Zealand IRD any money as a consequence.
Well, they're exempt from state corporate income tax, but they're not exempt from federal corporate income tax. But Uber, from being a loss-making company for many years, and we can talk about that, but as a loss-making company for many years, they were able to carry forward those losses as tax assets, and effectively those now work as a tax shelter, shielding them from the federal tax liability. It looks like Uber has something like $20 billion worth of federal tax assets on its books, which means that they can shield themselves from something like $20 billion US worth of future tax obligations. There may be more of those that pop up in the future, but Uber's strategy has shifted from one of generating tax assets, where they were growing extremely quickly but incurring losses along the way, to now using some of those tax assets with probably the ultimate goal of trying to deliver some cash dividends to shareholders.
So very quickly, if we go to slide 4, just for a second, we can see what all of this means for New Zealand.
Yes.
So slide 4, do you want to talk through these two slides, these two graphs for me?
So this is Razier, which is the rideshare half of Uber in New Zealand, Razier New Zealand Limited. Razier New Zealand Limited reports in 2023 total revenue of about $110 million. You can see that in the graph on the left, that line at the top, $110 million. The vast majority of that ends up as what they call intercompany service fees. So that's that orange line and all the blue stuff beneath that orange line. The green dotted line is intercompany service fees as a percentage of that revenue. You can see that pretty much all the revenue that Uber earns in this country is intercompany service fees. And from looking more closely through the accounts, I can tell you that the rest is refunds. And 2023, they had about $1 million of legal fees. Their total, what we call cost of services, cost of delivering services, was $300,000, next to nothing, because all of that cost sat on the driver's books. So if Uber were honestly reporting that number if Uber were reporting the gross revenue, the gross booking revenue, the total cost of all the fares that they were selling to consumers, then that green line would reach, I estimate, somewhere around $350 to $400 million by 2023. But because most of that is not booked there, then almost all of the cost all of the revenue that Uber reports ends up being intercompany service fees that are shipped off, presumably to Delaware, where they are shielded from US tax liability by the tax assets that they hold.
And so as a consequence, you've got a company which has $300 odd million potential or gross revenue
Yeah.
here, but yet somehow is recording pre-tax profits of $1-2 million a year.
Yeah. So
Now,
that's on the right.
yes, so either it's the most either it's a very poor company generating profits, or something else is going on.
Exactly. Yeah. I mean, on the right-hand side, that's the domestic profit that they're able to book. And you can see that in the latest year, it hit 2% of the revenue that they reported. But if that was put in the context of the gross revenue, the revenue that would relate to the cost of the fares in total, then it would be much lower than 2%, probably, less than 1%, definitely. It's hard to understand how a company that has been left such an indelible mark on the entire transport sector would be reporting such low profits. But the reason for that is that Uber doesn't really report that much of its profits here in Aotearoa, New Zealand. Inland revenue can't get very much of a slice of those profits because most of them end up going offshore, presumably to Delaware now, where they are shielded from US tax liability by the vast stack of tax assets that company has accumulated.
So we have, just to sort of recap for listeners at home, we have a company that has an increasingly outsized influence on transport in New Zealand. It relies upon essentially a contracting out model that makes that it looks and has been found repeatedly by the courts to be in contravention of New Zealand's existing employment laws. It's generating large amounts of revenue, particularly on a gross level, but it's paying tiny profits because most of that revenue is then shipped out overseas. And on that tiny revenue, there's then an even smaller tax liability, which IRD can then get its hands on. Whereas if you were running a normal taxi company in New Zealand, you would be paying minimum wage, you would be paying 28% taxation on your taxes, and you wouldn't have the benefit of being able to offshore the vast majority of your revenue. So there's this huge advantage from a model that's all premised on some labor laws or some labor activities that look as if they're not currently in convention with our current law in New Zealand.
I think that's a fantastic summary, Craig. And let me throw up a devil's advocate argument to you. You might say, well, Uber developed all this intellectual property, right? They have the right to be able to book that revenue themselves and to pay off the cost of putting together all this intellectual property, because I don't know how to do any of that stuff. That's far beyond me. True, I agree with that. But if you look at Uber's most recent filing, they value their own intellectual property at the princely sum of US $200 million, right? They don't think their intellectual property is that valuable anymore. And considering that, I mean, it seems crazy that a company that considers itself a technology company can be powered by an asset that they value so low. But it also means that from our side of the world, that the use or the cost to the company of using that intellectual property is basically negligible within the cost of an Uber transaction. So the idea that they're paying off some great expenditure and expense doesn't really hold that much water if they don't value the asset very highly. Therefore, the only explanation is that that is profit that is being shifted to that other jurisdiction, presumably Delaware.
So the final question I got here is, what can we do? What is it that we can do now as a consequence of this knowledge? What is it that we can do, next week when the Supreme Court case is being heard? What can we do to help, both protect the workers who are using the Uber platform, but also to help make sure that there isn't a firm that's being advantaged by its model so much that it's distorting the entire transport market in New Zealand.
Yeah, fantastic. On the employment side, I mean, I think you're probably more qualified to talk about that than me, but the government has introduced a piece of legislation called the Employment Relations Amendment Bill. Fantastic name, one of the better names that I've seen. Really, what's on the tin? Employment Relations Amendment. One of the changes proposed by that is that if your contract says you're a contractor, that you can't go back against that, basically. So the court can't find that you're not a contractor, because you're not going to be able to challenge that finding if that's what's written on the piece of paper, because that's kind of the current arrangement, that you can challenge that, because an employment relationship is more complicated than a piece of paper, which I'm sure everyone will agree with. There's some other damaging changes within that potential legislation, but that's the main one. It would be great for people to write to the minister in charge, Brooke Van Velden, and to say, I don't think this is an appropriate use of our resources. We don't think this is an appropriate change. On the tax side of things, I think we need to be looking across the ditch to Australia, where the Australian government for a decade now has been leading the world in terms of corporate tax transparency. For a decade, large corporates have been required to publicly publish their tax payments, and you can download every year of corporate tax payments in Australia. It used to be a $200 million revenue threshold, where every company that earned over $200 million would have to report their revenue, their taxable income, and the amount of tax they actually paid on an annual basis. I think in the most recent year, that threshold has dropped to 100 million, so an even bigger slice of the pie, or a slice of companies that will need to report that information. Additionally, last year, Australia passed a piece of legislation, or a rule called public country by country reporting, which is, again, extremely sexy naming. Public country by country reporting requires, in the Australian context, that every company with more than $1 billion worth of global revenue and more than $10 million worth of Australian revenue has to report revenue and profit for all of the tax havens and offshore financial centers where they book revenue. So we can go through the accounts much more clearly, work out how the money is flying around the globe, why all the money is being booked in Cayman Islands, Bermuda, Luxembourg, Switzerland, and not being booked in the jurisdiction where economic activity is actually taking place. It is a no-brainer for New Zealand to follow the Australian example, because almost all the big companies that we have here in New Zealand are already in Australia, meaning it's no extra work for the companies to copy the piece of paper that they sent in there to send into our government here. But it will give us a lot more information about where the money that we give to large multinationals is going. Taxing digital is a particular challenge, though. And I think if the more that we let digital companies control the economy, the more that companies like non-digital companies are going to find ways to all of a sudden become digital companies overnight. Taking away that incentive is crucial, and making sure we have tax tools that target that expenditure, or to target that revenue and the profit shifting that kind of a business model enables, is crucial. We had one on the books, the digital services tax, that was about to become
the budget. Yes.
Yeah, it was hacked to pieces at the last budget. The stated reason was because the Trump administration was likely to retaliate against that. That seems like an invented reason to me, and we have tools to retaliate back against the United States under the World Trade Organization agreement that we are all party to, if that kind of trade sanction happens as a result. So I think it was kind of an illusory threat, but it was a justification to do. We did this because it was maybe what we already wanted to do anyway.
And it cost us $500 million at the last budget. So which is how much money it was going to generate. Ed, can I thank you and the work that SICTAR and Workers First Union are doing in this space? It's really important. It's really important that we understand, how large companies like Uber and other companies as well are structuring their affairs so that they're not paying their fair share. And this really matters for all of us, because it's how we pay for our hospitals. It's how we pay for our schools. It's how we pay for the roads that Uber uses to make its revenue in the first place. So thank you so much for coming on. I'm sure we'll be talking again soon. And best of luck for next week when Uber is in the Supreme Court.
Thanks very much, Craig. Much appreciated. Thanks for providing this platform, and for all the people listening and watching out there. It's wonderful to have your support.
So thanks again to Ed for joining us in what I think is a really important issue, and it's a growing area of importance for New Zealand. Increasing classification of workers as contractors, Casualisation, workers finding it harder and harder to find full-time work, will mean that this will become a much more important issue in New Zealand in the future. Now, usually I use this section of the show to talk about the numbers in the economy, to talk about what's up or down and who's making money and who's not making money. But today, instead, I want to talk about something much more important. I want to talk about the loss of Te Pāti Māori MP Takatai Tashkamp. I want to pay my respects to her and the work that she led in Te Pāti Māori, particularly on workplace relations and safety, working for communities and for kaimahi who are often overlooked in New Zealand. I want to pay my and this show's respects to her whānau and to her colleagues in Te Pāti Māori. Sometimes in life, economics is actually the least important thing to concern ourselves about. Rest in peace, Tash. Thank you so much for joining us here on the Locked Out podcast. We hope that you found it both in parts maddening and in parts enlightening. If you've enjoyed the show, please give us a recommendation on YouTube, Spotify, or wherever you download your podcasts. Locked Out looks forward to talking with you more next week. Don't work too hard. Goodbye.